Hey guys, welcome to Stock Talk. Today we're going to talk about a SPAC stock. If you don't remember what that is, SPACs are special purpose acquisition companies. We'll get more into that during the video. This SPAC is called A1, and it recently announced that it will purchase a manufacturing tech stock called Markforged, a private company that wants to go public through a reverse merger with A1. This move has received a lot of positive, if a bit speculative, interest. In this video, we're going to talk A1 and Markforged, SPACs as a whole, and some of Markforge's competitors, as well as a famed stock guru Cathie Wood and her take on this whole matter. Finally, we'll discuss what we think about A1 as an investment and why it's a buy or a sell. Let's get right into it, but before that, make sure to like and subscribe to learn more about stocks. Also, let's hear your opinion in the comments down below. 1, better known by its stock ticker A1, is a SPAC, a special purpose acquisition company that was founded in San Francisco and last month announced that it will buy Markforged. If you'll recall from our first video, a SPAC is a shell corporation created for the sole purpose of buying a private company and bringing it public, with the dual benefit of relatively low share prices for people who invest in the SPAC before a deal is announced, and the ability to circumvent the laborious and often regulation-heavy IPO, or initial public offering process. SPACs are quite a frenzy right now, with major companies like DraftKings, Lucid Motors, and eventually WeWork going public through SPACs, and celebrities like Alexander Rodriguez publicly speaking highly of them. As a result, many companies that go public through SPACs tend to be incredibly volatile. One example is DraftKings, which skyrocketed nearly 20% from the end of February to March 1st, and then dropped nearly 15% over just 3 days starting March 2nd. And that brings us to the first reason that A1 stock might be a bit undervalued. Investors are scared of volatility, and somewhat understandably. The market has been very volatile recently as a result of the historically low interest rates through 2020, and then a sharp rise in interest rates in the first quarter of 2021. That being said, not all stocks are created equal. While some stocks are basically just riding the public opinion wave without a whole lot of basis in actual productive business models, that doesn't seem to be the case with A1. A1 has garnered investor interest recently, and there are some pretty solid reasons why. First of all, A1 is going to buy Markforged. Markforged is a 3D printer manufacturer, and 3D printing has been in quite a boom this year since advances in the technology and in 3D printing rollout have made it way more viable and widespread in various parts of the technology sector. Beyond that, Markforged makes the world's first 3D printers capable of producing continuous carbon fiber reinforcements, as well as pure copper and metal filament materials. Carbon fiber is an extremely lightweight, strong, versatile manufacturing material, and copper is a famously valuable metal, so much so that people will actually strip copper wires illegally to sell the metal on the black market. The fact that Markforged machines can print both of these substances and uses cloud architecture put it way in the forefront when it comes to tech companies. Now, as always, that doesn't mean that there's zero risk. A1 stock has been pretty volatile recently. First of all, its target Markforged exists in the tech sector, which many investors say is overinflated at this point, and is therefore especially susceptible to rises in the interest rate. Second of all, there was a bit of a reversal to the reaction that happened to A1 stock when ONE announced that it will purchase Markforged. While the stock understandably went crazy almost immediately on February 24th when the $2.1 billion deal was announced, since its peak around $13, the stock has been on a steady decline for almost the entire month of March. There are probably several reasons why this happened. First of all, as I mentioned earlier, SPACs are in such a crazy boom right now. The benefit of that is that when there's good news that breaks through the background noise for a SPAC, its price will usually skyrocket almost immediately as investors of all different levels of expertise try to get in on the trend. However, the downside of that is that those same investors will take their money out of their investment the minute they get bored, or the minute some other special purpose acquisition company makes it to the front of the headlines. Secondly, when a deal has been announced but not completed, as is the case right now with AONE and Markforged, the publicly traded party's stock price will be, more than anything, a calculation of how likely investors think the deal actually is to go through. While ONE announced the deal would be complete sometime in the summer of 2021, a lack of subsequent firm details or follow-up could be scaring off investors who are waiting at the edge of their seats for any evidence that this deal will definitely happen along a predictable time frame. One example of this volatility I've talked about, an example that's good for owners of A1 stock, is that one of their top competitors and another SPAC IPO desktop mobile published a Q4 2020 earnings report that failed to impress. While the company lost less money in 2020 than they did in 2019, they still lost money. Because, as I mentioned, a lot of investors jumped from SPAC to SPAC. A large enough portion of investors switched to A1 that the stock popped up more than 12% in early morning trading that Monday, March 15th. Another boon for A1 is that famed stock picker Cathie Wood is investing heavily in the company with her ARK ETF. Now, Cathie has had some highly publicized misses recently, such as Baidu and NIO, which she claimed would become the next Tesla and currently have investors worried. That being said, both of those companies are struggling due to circumstances outside of Wood's control, and also only may be struggling temporarily, as Cathie Wood famously picks tech companies years, not weeks or months, before they explode in value, like she did with Tesla. The fact that Cathie Wood invested so heavily in A1 instills confidence in a lot of investors who trust her judgment. So where does A1 stand? Well, personally, I think it's a great investment. Once the deal is completed with Markforged, which every indicator points to being inevitable, the stock will be operating under the ticker MKFG. And with the true intensity of how cutting-edge the Markforged tech is, as well as the super temporary nature of the trouble plaguing the tech sector, I think the stock is going to go nowhere but up. Could it reach $100? And if it does, how long will it take to get there? I don't know, but it's certainly heading in that direction. So guys, that was a brief overview of where A1 and Markforged currently stand as investments. Markforged has so many remarkable advantages over other 3D printing companies, in an industry that's already booming so much that it's hard to see anything but gains in A1 stock. But what do you guys think? Is A1 a bull or a bear? Let me know what you think in the comments down below. If you like what you saw, remember to smash that like button and subscribe and turn on notifications so you don't miss out on more videos. And I'll see you guys in the next one.